a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to talk now about what's going on with UK ETFs in light of what's going on with the British pound currency. With our ETF research director, Nina Mishra, you've been following this.
Yes.
You've been participating in news stories about hedging currency bets in your portfolio in light of a lot of what's going on overseas with currencies. So things are not looking too snappy for the British pound here lately.
Well, the pound, the slide which began after the Brexit vote on June 23rd, that has continued. And in fact, the pound is now the worst performing major currency in the world.
Wow.
And this fall accelerated recently after the British PM Theresa May talked about a hard Brexit. In fact, last week, the pound fell almost 6% in a matter of few minutes in a flash crash, and it touched its lowest level in almost 31 years. And it has continued to struggle to recover from those levels.
So this has caused a large amount of concern on the part of investors.
Yes, a lot of concern, but at the same time, a falling currency, a weak currency makes exports more competitive. So that is why it has really benefited UK stocks. The index there, the FTSE 100, is near its all-time highs due to decline in currencies, and exporters in particular have done pretty well. And while a weak currency makes exports more competitive, it also increases the possibility of inflation because imported goods become more expensive. Britons are also already facing higher food prices and higher fuel prices. And this higher inflation may not be good for the economy, because if the economy weakens due to all these Brexit-related developments, then the Bank of England may not be able to ease further because of higher inflation. So that way it's bad for the economy.
Yeah, now you've got some statistics here on ETF winners and losers in this realm, as far as names are concerned, of some examples, and also you're comparing the pound and against UK ETFs, right?
Yes, yeah. So because the pound has weakened so much and the stocks have done so well, so the currency hedged UK ETFs have been the real winners of this trend. These are the ETFs that provide exposure to UK stocks while hedging out the currency risk.
Okay.
So the biggest ETF in this, the most popular ETF in this space is by iShares with the ticker HEWU. It charges 45 basis points in expenses. It's up almost 14% this year. And there's another similar ETF by Wisdom Tree with the ticker DXPS, slightly more expensive, but it has done better than the first one because it focuses largely on UK exporters, and because exporters stocks did better than other stocks. So this ETF is up about 17.3% year to date. And there's one more by Deutsche X Trackers, that's also up about 13% year to date.
Okay, those are the winners. What about the losers?
Losers, of course, are the British pound ETFs. And the most popular ETF, the British pound ETF, is by Currency Shares. The ticker is FXB. Charges an expense ratio of 40 basis points, and it's down almost 18% this year.
Wow.
And there's another one by iPath, which is an ETN, exchange traded note. This is very unpopular, just 3.8 million in assets under management. So investors should, I think, avoid this one because it faces closer risk because of low amount of assets.
Okay. And comparatively speaking, what are we looking at here?
So on this chart, this is a 6 months comparative chart. So I wanted to show the performance of these currency hedged ETFs. So I've taken the most popular currency hedged ETF, the most popular British pound ETF, FXB, and I have compared that with the unhedged UK ETF,
okay.
EWU. So in dollar terms, you can see that EWU is almost flat for the year, but the currency hedged one is up more than 13%, and the British pound ETF, which has a negative correlation with the currency hedged one, that's down almost 18% this year.
And against that whole background, you're still looking for the British pound to be under pressure near term. What is near term for you?
I think in the near term, the British pound may remain under pressure because there's so much uncertainty ahead. And in fact, I think the movement will depend more on politics than on economics, all the political rhetoric and everything, the kind of comments those politicians make. And in the longer term, it may be good for the country. Some people believe that Brexit would actually make Britain very attractive, and there are some who believe that it's going to be disastrous for the country. So we'll see how it all plays out. But as I mentioned, that currency may remain under pressure. And I'm a little bit wary of this British stock rally as of now. First of all, they look quite expensive now after this rally. Secondly, the rally was mainly led by materials and mineral mining stocks. And those had rebounded from a very sharp sell-off earlier because of the commodity rebound. And now if the Fed gets ready to raise rates and the dollar appreciates, then the commodities may come under pressure again, which may hurt some of those stocks. So I'm a little skeptical whether this stock rally could continue, but this currency may continue to weaken for some more time. But investors should understand that the pound, as well as trading UK stocks now, it's a bit of a high risk trade because of the large amount of uncertainty, and they should be prepared to reverse their trade if the trend changes.
So it sounds to me like when you say near term, long term, very hard to put that on a timeline because of the politics of the situation.
Right. That's very hard. Like in the coming months, at least in the coming weeks, I see that the currency will continue to weaken.
Okay. Do you own any of those ETFs that you talked about?
I don't.
Thank you for that. Don't forget, you can get more ETF information on our website, zacks.com. If you're not there already watching the video, just go to the homepage, use the top toolbar, hit the Funds tab, and that will cause another drop-down window to occur, taking you right to the ETF section of zacks.com. With Nina, I'm Terry Ruffalo.